Gold Market Forecast, April 17, 2025. Can the rally push beyond 3,320? Market overview: gold prices have continued their impressive rally, climbing above the 3,320-ounce threshold on April 16th and setting a new all-time high of 3,320 ounce during the morning session. The precious metal has gained more than 23% year-to-date, making it the top-performing major asset in 2025 so far. Investors and analysts alike are watching closely as the market momentum remains strong, driven by geopolitical tensions, macroeconomic instability, and surging demand from both institutional buyers and central banks. What's driving the gold surge? U.S.-China trade war escalation. Source: The Guardian. Tensions between the United States and China have escalated rapidly following new export restrictions announced by the Biden administration, particularly targeting AI chip exports to China. NVIDIA, one of the biggest players in the sector, warned of a potential $5.5 billion revenue shortfall due to the ban. Its stock dropped 6.5% in a single session. The WTO has warned that these trade barriers could reverse global growth. It downgraded its forecast for 2025 global trade volume from plus 2.7% to 0.2%, triggering a wave of risk-off sentiment across markets. 2. Weakening U.S. dollar. Source: The Times. The U.S. dollar index has fallen sharply to its lowest level in 3 years, further boosting demand for gold as a hedge against currency depreciation. The dollar index fell by 1.2% this week, breaking below the 100-level support zone. In contrast, the euro and the pound strengthened amid hawkish tones from European central banks. 3. Massive central bank buying. Source: Reuters. Central banks, particularly China's, have significantly increased their gold reserves. The People's Bank of China has tripled its gold allocation to 8% of total reserves and imported over 700 tons of gold from the UK in the last 2 years alone. This shift is part of a broader trend of de-dollarization, with nations reducing their exposure to U.S. treasuries in favor of tangible assets like gold. Technical analysis. Source: Daily Forex. Source: Market Pulse. From a technical perspective, gold remains in a solid uptrend. Price action is well above the 50-day and 200-day moving averages. The RSI, Relative Strength Index, hovers around 70, suggesting a possible overbought condition. Meanwhile, MACD indicators have started to show bearish divergence, hinting at a potential short-term pullback. Key support levels: $3,200, $3,55, $3,120. Key resistance levels: $3,139, $3,266, $3,300. Forecast for April 17, 2025. Sources: UBS via investing.com, Goldman Sachs via mining.com. According to CoinCodex's short-term prediction model, gold is expected to increase slightly by 0.83%, reaching 3,350 ounce by April 17th. Source: CoinCodex. Longer term projections remain bullish. UBS revised its 2025 forecast to 3,500 ounce. Goldman Sachs projects 3,700 ounce, citing ongoing demand and limited supply. Conclusion: gold continues to shine in 2025, supported by a perfect storm of macroeconomic pressures, geopolitical risks, and shifting monetary strategies from global powers. While the long-term trend appears bullish, short-term corrections should not be ruled out, especially if profit-taking intensifies or global markets stabilize temporarily. Traders and investors should continue to monitor central bank policies, U.S. inflation data, and geopolitical developments for further signals. Good luck today. See you in tomorrow's video.